Hello, everyone. Welcome to this session on how to find properties. This is the Black Apartment Investors, and this is what we're going to talk about today. So, I always start off with the legal disclaimer. I'm not an attorney, accountant, economist, or financial advisor. Any information I provide is not a promise of returns. You're responsible for conducting your own research and due diligence before investing, with the understanding that all investing has risks. So if you're interested in investment opportunities, let me know. And part of it is my legal responsibility to determine what investment opportunities are suitable for you. There is a rule in the SEC that says you cannot offer someone an opportunity unless they're a general partner without knowing what their risk tolerance are, how much money they have, etc. And so that will help me determine how to advertise, because certain properties I'm only going to present to certain people that I know what you want and I know your financial situation. So about me, I'm from East Oakland, and growing up in that low-income neighborhood, it helped me focus on improving communities through real estate development. That led me to work for government. I worked for Alameda County. I worked for the city of Berkeley. And we invested in new construction and the rehab of affordable apartment buildings. And for people who don't know, apartment buildings that are low income are one of the most complicated type of properties to develop, just because the financing is so complex. So that gave me good experience on the finance side and the real estate development side. I funded 40 projects worth over $1 billion, and I was also an asset manager of 4,000 apartments, both affordable and market rate. And the asset manager oversees the property manager, does higher level work like when to raise rents. They deal with investors. They also determine the financing, and they check the market, determine when it's time to sell. I've also invested in my own small rentals in California, Phoenix, and Florida. I'm a licensed California real estate broker, and currently I find and analyze apartment deals for myself and other investors to buy. So the recap and progress report is something that I'm always going to go over, just so we don't forget what we've learned, and so we can keep the most important things in front of us, which will determine how we're going to buy our apartment. So the first thing is your goal. What your goal is, whether it's immediate cash flow or retirement, tax breaks, buying a place for your family to live, or inheritance, those will guide you on where to buy, what size property to buy, when to buy, how you're going to raise money, etc. So for instance, if you are looking for immediate cash flow, you have to buy the property at a cheap enough price that will allow you to do that. And so people are not investing in California at this time, or in Northern California, or maybe in LA. Those are some of the more expensive places because you just can't get the immediate cash flow unless you find a super deal somehow. Some people, if they want to have something for retirement, they may want to buy something in California. It may seem less risky to them. They can wait and hold it and refinance, and when they get ready to take the property's cash flow, when they really need it in 20, 30 years, then the cash flow will be there. And then some people, tax breaks, they will take a loss on some properties because they're trying to shelter tax from another place, some type of other income. And some people will buy multi-units for a place for themselves and their family to live, or just an inheritance, just don't really need it right now. You're thinking very, very long term. The education part is critical, because nobody can make a decision for you on what type of property is best, because everybody has different goals. So I can't bring an investment to you and say this is a great deal unless you have educated yourself about the business, you've thought about your goals enough for you to make your own decision. Saving money is important because you have to have some cash, some skin in the game if you want to invest. Building relationships, also you need a team to help you. You need a finance team, a partner, property manager, someone to do rehab, someone to maybe close the deal, a title company. So these relationships are important. And then trust issues. This is a key for us in our community in particular. We have hundreds of years of trust issues that we're trying to overcome, as far as not being able to work with each other, not trusting each other, which is a huge hindrance. And then sharing information with other people and your children. The only way that we're really going to understand finance and investment and money is to learn and then share it. I always encourage people to bring their kids to the meetings if they're old enough to listen, because that's how it gets in their minds at an early age. Wealthy people do that. They bring their kids into their business. They teach their kids investing. So when it's time for them to grow up, it's no big deal. There's no fear. They've grown around money and investing, and they could just jump right in. So our trust issues in our community, where we don't feel like we can work together, we don't feel like we can trust each other with money and deals. There are some people, Black people of integrity out there. And we just have to work diligently to find people who are reliable and trustworthy and have integrity. There's people out there. My commitment to overcoming this, because I'm very aware that we have this, is for me to, one, be reliable, do what I say when I say I'm going to do it. That means no CP time. I know that's part of our culture where it's okay for us to just show up late, but I don't do that because it's an integrity issue for me. I said 2 o'clock, that means 2 o'clock. I want to respect people's time. The one thing we will never ever get back again is time. And I don't want to waste anybody's time. So I respect that time by starting on time. And then being transparent. Anything I'm doing, I want to be totally open, free for anybody to ask me any questions, to know if it was, for instance, a deal, where the money's coming from and where everything is going and the timing and the progress reports and everything like that. So today's session is focused on how to find properties. And these are some of the many ways that you can find it. You can go just a regular route, which is real estate agent listings. Real estate agents have off-market deals, and that's based on relationships. The government has properties in several different ways. Lenders, when they foreclose. REOs, which is when the lender has already gone through the foreclosure process and they own the property. Directly from sellers, relationships, word of mouth, and estate sales when people die. So real estate agent listings, they're found, these are some of the 3 places. LoopNet, which is a free service. You can go online and you can search by area, by number of units, by acreage. I mean, there's lots of different ways you can search. MLS, which is a paid service. And then CoStar, which is also a paid service. MLS is more for residential 1 to 4 unit properties, but there are brokers who put larger apartment buildings on the MLS. And then CoStar is primarily a commercial property service that's paid. And the reason why brokers use this is because CoStar collects so much data. They also own apartments.com, and they have so much data that allows them to run comps, to understand where the market is going, to understand what's going on with that particular seller. So they put their properties on CoStar because it allows them access to information which they will share to you as a buyer. So the offering a memorandum, OM, is a brochure that listing agents or brokers prepare and give to buyers so they understand what's going on with the property. So understand that this is not, it's not like an accounting record where it's just facts. There are a lot of salesy things in this document, so you need to double check everything. It'll first start off with an introduction to the brokerage firm. Marcus and Millichap, Colliers, and CBRE are some of the big commercial companies that sell multifamily apartments. And then it'll give an overview of the region, the neighborhoods, to help you understand the economy and how this property fits into the economy and why there's a demand for it. An overview of the property, how long it's been owned by this owner, how old it is, any renovations that have been done, how many units, any other amenities like swimming pools or community rooms will be in this overview. And then it'll briefly go into the property's financials. So some of them will break out the financials of exactly what's going on or what has been going on as far as the rents and the expenses in the last year. And then they will compare that to what they think the property can command if you make certain changes. So if the property is under market rents, they will show you what the income will be if you brought the property up to the current rents, or If you need to maybe pay for some renovations, they might put that in there. What you want to understand is these numbers, again, are based on their perspective, how you want to run the property, the rents, and also it's a sales brochure. So they may leave out something like property management, or they may have a property management fee that is lower than what you need to run the property. So you need to take their numbers, put it in your own spreadsheet, and adjust it as necessary. Especially in rent control areas where we are, some of them will not mention the fact that even though the rents are way below market, it's going to take you a miracle if you can to even get the rents up. You might have to relocate people or wait years and years, and that's not something that a lot of them mention. And then they'll also have the property comparisons to show why they're justifying the price that they're asking. So these real estate brokers also have off-market properties, and it's easier sometimes for the sellers who don't want a whole lot of showings and lots of interested buyers coming in through the property, because every time they do that, they got to notify all the tenants. It's kind of a pain, it's a hassle, and all the questions, and it just takes longer. So they prefer, some of them, to just do an off-market deal where they know somebody who has the money, they're ready to close, they're looking for a property like theirs. And so real estate brokers who are active, they may just reach out to somebody they know who's waiting for a property and say, hey, I got a seller who's interested in selling their property. Are you interested in buying? So to get to know these real estate brokers is a good idea. Build relationships with them, talk to them, tell them what you are looking for, and then they will keep you in mind if they have come across a property and may just do an off-market deal. But you must be able to close. This is the key thing. When you talk to them, you have to be clear about what it is you want, and you have to be clear that you can close, because it's their job to vet you, and it's their job to recommend to their sellers whether or not to get into contract with you. And it's all based on your ability to close. Do you have money? Do you have a lender lined up that can give you a loan? Can you close in a reasonable amount of time? And if you can do that, it'll help you avoid the competition and competing with a lot of other buyers. So how to build broker relationships. It's in the commercial field, it's more corporate, golf course type, where a lot of them wear suits and ties, and it's who you know. So you might have to reach out to them for sure, tell them exactly what you're looking for, demonstrate that you have money, and then keep in touch with them. So this is an example of how I approach a real estate broker. So for instance, I'll say, hello, my name is Anjanette Scott. I and my investment partners are looking to purchase apartment buildings between 50 and 60 units in Laurel, Temescal, and Broadhurst neighborhoods. We have $2 million of cash, which I can provide proof of funds. Or if you don't have the funds, you could say we have a successful track record of raising money. We want C or B class properties, value add deals. They need $20,000 to $50,000 in rehab or have below market rents. We can complete our due diligence in 21 days, just as long as we can inspect the units and close 30 days after that. Do you ever come across any properties like that? Or you can say, can we meet for coffee sometime, get to know each other and see how we can help each other? Or can you keep me in mind if you come across any properties like that? So what I've explained to them is I'm very clear that I am a sophisticated investor, or maybe if I've never bought a property before, I'm telling them that I'm ready to buy a property. I've thought about what I want. I know exactly what I want. I have the money to close. I'm serious, and I've thought about my ability to close. And if I find something that I like and it works, I will close. And that's what they want to hear, because they only get paid if they close. If you're hemming and hawing, if you don't know what you want, then most likely they're not going to reach out to you, because you're saying that you're probably not going to either make a decision because you don't know what you want, or you can't make a decision because you don't have the money, you don't have a lender, etc. So how to find active brokers is not hard, because a lot of them are advertising their property. So if you go to LoopNet, you can notice which brokers' names keep coming up. You can go to open houses, multifamily properties, introduce yourself, give them your card, ask for their card, tell them what you're looking for. You can also call local offices of the big brokerage houses like Marcus and Millichap, CBRE, they're all online. You can all find who are the brokers in this area, the vice presidents, a lot of them have those titles, and you could just reach out to them. And then also go to rental housing associations. These are the associations that represent people who own property. And there's several of them in the Bay Area. There's EBHRA is one that serves Oakland, but there's one in Berkeley, one in Hayward, and they're kind of all over the place. And you can find that, and then sometimes they will have these events where you can go, even if you don't own property, go meet them, and some of the brokers there will be there, or they'll have a pamphlet with the brokers in the back of the book. Government properties. So governments come across property in several different ways. Sometimes they have property because they bought it. They bought it and they want to redevelop it for a public purpose like affordable housing or a freeway or whatever. And some of them get it by eminent domain, different reasons. So talk to public officials. They will know where the public property is. Economic development agencies, housing departments, the city manager's office, public housing authorities, they also are big property owners, and a lot of them are divesting their properties because they cannot manage it. They can't afford to manage the public housing, or they just don't want to deal with it anymore. They're selling it to private owners or nonprofits. So the other way is through a tax sale. So property default, tax default to land. If people don't pay their property taxes, government gives you a certain amount of time, and every county is different, every state is different, and after that they will take your property and sell it for the amount of the property taxes at a public auction. So Bid for Assets is the online auction that many counties use. Also the IRS, which is income tax and other government seizures. You can go to the Treasury Department and see if they're auctioning off any property. HUD, when they insure property and they have to foreclose because a person doesn't pay their mortgage, they'll also take back the property and sell it through the HUD Home Store. And through both Bid for Assets and HUD Home Store, you can set up a query to say what you're looking for, and then they'll notify you if something comes up that meets your requirements. So when people don't pay their property taxes, the government has to go through a very specific process. And so one, just so you know, you will buy the property sight unseen because people are most likely living there, and you can't see it like an open house like you do when you have a regular house sale. Usually hold it, each county holds it once a year usually. I'm speaking specifically for California. You go on Bid for Assets, you register, it's free. And property taxes, just so you know, the way the county is able to foreclose, just like anybody's able to foreclose, is that it has to be a lien on your property. And a lien is a monetary obligation that says you must pay this, or we can take your property and sell it and pay us what you owe us. So if that happens, if the owner doesn't pay property taxes, the county will sell the property for the outstanding taxes plus the interest and the penalties to the higher bidder. In California, they give the owners 5 years to be delinquent on taxes before they auction the property. So when they do that, you have to go and Bid for Assets. You have to pay a $35 processing fee, which is non-refundable. And then you have to pay a deposit, which is refundable. And that has to be wired before you bid on the property. So you have to give yourself some time. Don't try to do it on the day before the auction starts. Do it ahead of time. And every deposit is determined by the county. It's a different range. It just depends on what the county is requiring. Between $1,000 and $5,000, which is what Alameda County requires. Some counties also make you fill out a vesting form that tells the county how you're going to take title. Is it going to be in your name or a company name, LLC, corporation, etc.? So the county provides a list of properties before the auction. Some counties put the address and the APN, which is the parcel number that's assigned to the property. Some counties just put the APN. Again, it's as is, no repairs, can't go inside, no inspections, nothing like that. So if the owner pays, the property will not be available the day of the auction, and they have their right of redemption, which is called. In California, the owner has until the day before the auction to pay taxes, penalties, and interest. And other states may allow the previous owner to redeem the property even after you buy it. So after the sale in California, the previous owner has 1 year to challenge. Now, this is rare, and it's not based on whether the owner comes up with the money for the taxes. Some other states allow you to do that, where the owner can say, okay, I now have the money, and between this time and this time, the owner can pay the taxes after the sale. This is not like that in California. The only way the owner has a right to challenge during that 1 year is if there is a technicality. The APN was wrong. The address was wrong. The date, something on the date was wrong. They didn't give the owner due notice, something like that, some technicality. But they cannot just change their mind and say, oh, I've come up with the taxes after the fact. But if something like that happens and the owner challenges, and if they're successful, if you bought the property, you would get your money back that you paid for the sale, but you would not get any improvement. So if you bought a property and renovated the whole thing, you're not going to get your money back that you used to renovate. So title insurance. You're not going to be able to get title insurance for at least a year because part of it's this challenge. And the title insurance is usually required when someone wants to buy it. So if you were going to try to flip a property that you bought in a tax sale, that's not going to work because you cannot guarantee that buyer, the next person, title insurance, and their lenders are going to want title insurance. They're going to want title insurance. And so you have to hold it for at least a year. So the bidding process, it's an online auction, and it's from a certain time period. And you'll see the numbers changing as people bid up the property. They also have settlement instructions, which are the requirements of how to pay if you win the bid. So the county gives you a date to settle or pay. They'll say you have until 72 hours to pay the rest of the money into this account or wire it to this place. And if you don't pay, you don't complete the transaction, you don't deposit the funds, you will lose your deposit and you may be banned from future auctions. Because in California, if you don't buy the property, they can't just simply sell it to the next highest bidder. They have to take legal action against you. Okay, so there's a minimum bid, and then if you put in your maximum bid, the computer will automatically bid up for you up to your max. There's also called a reserve bid, which is the minimum bid required by the county. They don't necessarily tell you what it is. You just know that everyone knows that if no one meets that reserve bid, then they don't sell the property. So for instance, if you place a bid at $18,000 and the reserve bid is $20,000, no one else bids, then you won't get the property. So the research is very, very important. Call a title company, go down to the county if you must, look at the liens on the property, make sure you know which lien order you're in. So property taxes are senior to mortgages. And what happens is if you pay property taxes, it wipes out the other liens below it that are junior below it. So if there's no money left to pay that mortgage that was recorded after the taxes became a lien, and understand taxes are always on there, then that mortgage company is not going to get paid. IRS, and then senior liens, if you have a senior lien, which in some cases the IRS may be senior, depends on the recording order. And liens are placed on the property of seniority based on when they're recorded. So if I record a deed today and then I record another deed tomorrow, the deed I record tomorrow is junior. It's a lower priority, so that means that there's When the money comes in from the sale, the senior lien holders get paid, and then the next order of lien holder gets paid, and the next junior one, and the next junior one, and then the owner if there's anything left. So if you, for instance, bought a property and there's property taxes on there, and IRS has a lien that was recorded earlier before the property taxes, if you buy that property through the tax sale, that IRS lien is not going away. You need to check the order and see if it's going to stay or not. You might need to talk to an attorney, but you may buy a property, and when you get it, it is not free and clear like you think. You may still have other liens on there that do not go away. I also think utility bills, the person wasn't paying their utility, those might also be senior to property taxes. So once you buy the property through the tax sale, you get a tax deed. You get that from the county, between 3 weeks and 90 days. And then once you have the deed in your hand, then you can take possession of the property, which means that now you have to remove the people that are living there. So if in its apartment, you might not want to move them out. You may just want them to stay, and now you tell them now they pay rent to you. If you do want to move somebody out for whatever reason, then you have to evict them. Whether it's the owner or whether it's tenants, you have to go through the eviction process. And so there's another process regarding taxes and how people buy property through default taxes is with tax liens. We don't do this in California, but what happens is myself, I go and I buy a lien. I pay the person's property taxes. I pay the county what they owe. Now that person owes me. They owe me the property taxes I paid on their behalf, and they owe me interest. And if that owner doesn't pay me property taxes plus the interest by a certain time, then I have a right to foreclose. And then once I go through the foreclosure process, then I have to evict them and remove them from the property if I want them to stay. If I want them to leave. Okay, so lender foreclosures. It's similar to a property tax auction with some differences. So lender foreclosure is when the person who has a lien, a monetary lien, a deed of trust or a mortgage, they've loaned that person money, they didn't pay the mortgage, and now the document they recorded allows them to foreclose, take the property, sell the property to satisfy whatever they are owed. Auction.com they do online and they do in person. So in California, where we are, there's a specific place that they do in-person auctions. You go there at a certain time. They will tell you on the website when they're planning on auctioning this property. You have to register. You have to have cashier's checks and show them that you have enough cashier's checks to bid on the property that you're interested in. And these are very inconsistent. They get canceled often because, similar to when a person has property taxes, they have the right to the day before to pay their property taxes, and that property is no longer available. The owner of the property has a right to pay their mortgage and catch up to their mortgage and penalties before the sale, and that stops the sale. Or sometimes they will make an arrangement with the lender to give them more time. So sometimes you go and they will say, well, this is canceled or this is postponed based on the lender's requirement. I don't necessarily tell you why, but that's a lot of times what's happening. Their owner is making some arrangement and they're asking for more time. So Husbu is another one. Bid for Assets also has lender foreclosures. HudsonandMarshall.com. They also still sell properties on the courthouse steps, where it's, again, a live auction. People are raising their hands and they're bidding like that old-fashioned way. And some people go directly to the lender. They have relationships with the asset manager and the lender, and they will go directly to the lender and ask, can they buy this property if the person doesn't pay taxes, as opposed to going through an auction. So an REO or bank-owned property is when the bank has gone through the foreclosure process and they did not get what they wanted from the auction. And so they will take the property themselves by basically placing a bid on behalf of themselves for whatever price they want. And then at that point, they'll become the owner. And then once they're the owner, they can then fix it up, rehab it, or do whatever they want and then sell it. A lot of them sell it on the open market. They will sell it through a real estate agent who specializes in REO properties, or sometimes they'll just sell it to off market to investors. In the foreclosure crisis in 2008, there's a lot of hedge funds who bought properties directly from banks. And then some smaller investors who knew the asset manager, they would also buy properties directly from banks. And then many of them were also on the MLS, where you can go online, look at the property, go to the open house, just like a regular sale. So again, if you call the asset manager, if you have that relationship, maybe you might be able to avoid competition or avoid it being on the open market and just buy the property directly from the bank. So the REO, they have brokers' price opinions, which determines how much they're going to sell it for. They're going to try to get the most money they can, of course. It's not a full appraisal, but it's a cheap way for them to get an idea of what the property's worth. And then again, you might be able to see the inside of the property and do an inspection if the bank has evicted the owners or the tenants. So the other way, going directly to sellers, is probably the easiest way, but it's kind of difficult sometimes. It's based on a lot of relationship building, knowing people, or doing the hardcore networking or cold calling, things like that. But a way that I found to meet sellers are through the rental housing associations that I mentioned. These are associations that represent owners of properties. They give them advice, they're advocates, they teach them classes on property management, and they help them understand rent control laws, etc. So they meet on a regular basis, and they also may have some social networking. So East Bay Rental Housing Associations, for those in the Bay Area, they have a meeting downtown, or not downtown, on Grand Avenue, like once a month. And I've gone. I'm not a member, but I was able to go and meet people and talk to owners. It's also a good way to understand what owners are dealing with in your market. If they're dealing with tenants things in California, the rent control is a big issue. So you'll hear their stories, and you can understand kind of how to navigate and avoid some of the problems they're avoiding. So part of it's networking. Then as you go along, you may build some relationships with people who know you want to sell, and then they may contact you if they're interested in selling off market. And then Berkeley also has their own association. Hayward has their own association. So you can send out letters, which I've done. You can send letters to owners saying, I'm interested in buying your property. Calling, cold calling. You can buy lists. CoreFact is a company, CoreFact. They have lists and they do mailing services. And so that is a way to get information. It's a challenging way, especially if you're trying to buy bigger apartments, because those are usually owned by corporations and LLCs, and you can't necessarily get to the owner or the decision maker. But some of the smaller properties you can, like 10, 20, 30, even some of the 30, 50 unit properties, I've been able to talk directly to the owner. And then door knocking for smaller properties may work if you feel safe in that neighborhood. So I'm talking like 5 to 10 units where the owner still may live in one of the units, but that's more for smaller, much smaller properties, so it may not be viable. And then relationships, word of mouth. This again is the easiest way. If you know people in the industry, if you know lawyers, a lot of lawyers have to work with property owners, accountants work with property owners, wealth managers. These are all people who know and work with property owners and help them. And if you know them or you know sellers, then it's easier to have someone call you and say, hey, my client is interested in selling your property, or I'm interested in selling my property. Are you interested? Can you close quickly? And then estate sales. If someone dies, they don't have a trust, property has to go through probate. There's a very specific process, and it's all public. The court will determine the rules, the timing. A lot of times it will take a long time. And what happens is they most times will hire a real estate agent, will put it on the public market because it's the court's responsibility to help the heirs get the highest bid or highest price for the property. And then when they do that is they put it on the open market. They'll have an open house just like a regular sale, and then they'll accept a price, an offer, which has to be at least, I believe, 95% of the appraised value. So they'll have an appraisal done by a court-appointed appraiser. And then the real estate agent will let people know that, yes, this property needs court confirmation. And so you go down to the court, and there's a date set, and the court will say, this is the price that was offered for such and such property. Are there any other bids? And the bid has to be a certain amount, like 5% plus something else, amount over whatever that bid was for them to get the property. And it could be a public bidding process. So right now, where we are, that doesn't, I have been to several of them and I've not seen anyone bid over. And I think because the prices are so high, it doesn't make sense for people to bid over because they have some sentimental value to the property. And I've never seen any apartments either. A lot of it's just houses. So if the property is not subject to probate, then the executor who is in charge of the estate can sell it to whoever they want. And in this case, it's easier for you to know about the property and get contacted if you know them or if you have relationships with estate attorneys. So that is it for this. People have questions. Stop for a few seconds. Okay, so again, this is the statistics and data sources that people can use to do their research. These are education resources, which I highly encourage people to go on and learn as much as you can. These are other investors who have lots of stories to share, lots of mistakes to share, which you can learn from. And they also have their own properties, which you can invest in, some of them. And then here's some other education resources. Yardi, they do research nationally on different types of properties. They do multifamily, they do office. And what they're giving you is statistics on how the markets are doing. The rents are going up, which particular cities are growing faster. So that's a very good thing to subscribe to. And then Multifamily Insiders is a property management website where they are telling you day to day on how to deal with different issues as a property manager, how to deal with tenants, things like that. And then NRE Online is a national real estate. It's almost like a newspaper, giving you understanding of what are the different topics, what are the different trends going on in real estate. Here's some more education events in the Bay Area. We have several real estate groups that meet. Virtual Investors Group, they meet in San Francisco, but they also do webinars, and they're having one December 12th on underwriting. So you go on meetup.com and you register. And then Bay Area Multifamily Investing Group, they meet regularly in Fremont. The next one is November 19th. And then Bay Area Commercial and Multifamily Group, they are meeting November 21st from 7 p.m. to 9 p.m. And then here are some future topics: how to raise money legally, getting a loan, due diligence, going through escrow, property management, asset management, rehabbing, 1031 exchanges where you sell an investment property and then you take those proceeds, that profit, and you buy another property instead of paying taxes right then, and then appraisals. So the next meeting is how to raise money legally. It's Saturday, December 21st from 1 p.m. to 3 p.m. Starts and ends on time. It'll be at San Lorenzo Community Center. Thank you.